to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. This week, investors are witnessing a historic move in gold prices. The precious metal finally broke above a long-standing overhead resistance level to reach new all-time highs. On Thursday, gold closed at $2,170 per ounce, its highest level since records have been kept. As of this Friday recording, gold now checks in at $2,203 an ounce. On the heels of a 5.2% advance on the week, its best week in nearly 6 months. Silver shows a weekly gain of 5.9% to bring spot prices to $24.70 an ounce. Platinum is up 3% to trade at $926. And finally, palladium is putting in a 6.7% gain this week to come in at $1,061 per ounce. For now, the white metals are playing catch-up to gold and are certainly taking a back seat to the yellow metal, as its historic price move commands headlines. Of course, gold's spot quote in terms of U.S. dollars is largely a reflection of the currency's steadily declining purchasing power. Plenty of other assets are also zooming to new nominal records, including stocks and cryptocurrencies. The question for investors is which will hold value or gain value in real terms going forward. The stock market tends to outpace inflation over the long run. However, buying the S&P 500 index fund at the wrong time could mean it will take years or even decades for buy-and-hold investors to see a real positive return on investment. The period from 2000 to 2010 was a lost decade for equity investors. The S&P 500 failed to deliver a positive nominal return over those years, let alone gain enough to beat inflation. And the 1966 to 1982 period was an extended lost decade as high inflation inflicted devastating real losses on Wall Street. The same inflation that peaked in the late 1970s helped propel gold and silver into epic bull markets. Few investors today own any bullion at all for inflation protection. Most are dangerously overexposed to stocks, bonds, and other Wall Street assets. Even bullish equity analysts admit that stocks are looking overextended here and due for at least something of a correction. Precious metals markets are nearly the opposite of overextended. They are vastly underowned by the investing public. In recent months, assets held by gold-tracking exchange-traded products have shrunk while retail bullion buying has slowed. Premiums have come down across the board in the process. But gold's breakout to new highs is likely to draw in new buyers who had previously sat on the sidelines and don't want to miss out on the bull market. It will also trigger momentum trading algorithms in futures markets with buy signals. Gold has risen thus far largely on the strength of demand from Asia and global central banks. China has added to its gold reserves for 16 consecutive months. The People's Bank of China gobbled up 390,000 troy ounces of the monetary metal last month alone. The Chinese central bank now holds more than 2,200 tons of gold and is showing no signs of slowing down on its purchases. Central banks generally don't accumulate silver or other metals as monetary reserves. That partially explains why gold has outperformed the white metals over the past few years. While gold has traditionally served as the money of kings, silver has served as the money of the masses. It is far more practical to be used in circulating coinage. Silver dimes, quarters, half dollars, and dollars can be more readily deployed for everyday purchases than far more valuable gold coins of any size or denomination. Silver bullion coins, rounds, and bars are also more accessible to investors with limited budgets. Gold's push to new highs should boost broader interest in the metal space. And once silver gets some buying momentum behind it, its spot price can move more rapidly than gold's. In a precious metals bull market, silver stands to ultimately gain much more than gold in percentage terms, both because silver is a tighter, more thinly traded, and naturally more volatile market, and because its price is currently deeply discounted versus gold. Silver prices would have to double from here just to match gold's feat of making a new high. From there, a silver bull market could accelerate to much higher highs. Those who would like to seize the opportunity to invest heavily in physical silver while prices remain depressed have many options. Of course, it's always a good idea to start with some coins, rounds, and bars in various sizes as an essential foundation and for potential use in barter transactions. Beyond that, investors need not necessarily take home delivery of silver bullion products in cumbersomely large quantities. They can instead opt to own silver that is stored directly in a secure vault on their behalf. Money Metals Depository is proud to offer the most convenient and cost-effective way to own physical bullion with the peace of mind that comes through advanced security systems and insurance through Lloyd's of London. We are super excited for this upcoming summer when we move into our all-new Money Metals Depository facility. Having outgrown our current building and our existing vaults, the new Money Metals Depository is more than double the size of Fort Knox and is the largest such facility by far in the western half of North America. You'll be hearing more about this in the future. For more information on how you can store your gold and silver at Money Metals Depository, just visit our website at moneymetals.com or talk to one of our specialists by calling 1-800-800-1865. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. And don't forget to tune in every Wednesday for the Money Metals Midweek Memo podcast as well. To listen to either podcast, just go to moneymetals.com/podcasts or find that on whatever podcast platform you prefer. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.